Another absolutely wild day for AMC today. Down another 18%. That's 42% in the red over the past 2 days. Things are getting crazy. Call it a black swan event, arbitrage, whatever you want to call it. If this doesn't tell you that we are about to squeeze, we are at the end of the macro and things are about to get absolutely wild, they already are. I don't know what else to say. I'm going to start with this chart, and this is just the macro on AMC along with the OBV on the bottom. And before I even touch on the OBV, I want to point something out here, that this gap down that we're seeing here, down to this 250 level, we have now come down pretty much to the midpoint of the previous flat portion here. And there are still two gaps that need to be filled. And the first is 230, and the second is 157. Now, I'm not saying for sure that we're going to 157, but I would at least expect to close the gap at 230. Would this surprise me to see a gap fill at 157? Honestly, at this point, absolutely not. Things are getting pretty wild here. Finishing up the macro with closing all of the gaps to the downside, I don't really see that as the worst thing in the world. That being said, though, I absolutely do not want to form a lower low than all-time lows here on AMC. So this blue line that I have running across here is the midpoint of the flat portion of the previous cycle. So when you break down from your 6 point, you break below it, and you reject, you reject, you reject, you break through, establish support, bounce, 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 back up, and then you come down, break through it again, reject, 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 come down for your lower low, your third bottom, the lower low, and then you finally break through and squeeze from there. The equivalent of this would be the this red horizontal line that I have here at 520. So macro-wise, this is just showing what I was pretty much just showing you, where you're rejecting here, reject, reject, bounce to support, bounce, bounce, break back through, reject, try peak rejecting all three peaks, get the third bottom here, the lower low, before you start ripping through the upside levels of resistance and then into your squeeze from there. And the equivalent in the current cycle is 520. And I've mentioned this in my previous few videos as well, that 520 plus is your macro break on AMC. So same level of resistance here. You finally break through it, bounce, came a little bit lower here, reclaim, break back through it, reject, second bottom, all three peaks of your tri-peak rejecting through that red line, and then again rejecting to your third bottom, the lower low. Although this is a very exaggerated move to the downside here that we're seeing for our lower low, it's still fractally sound, and the move that we got on the third peak of the tri-peak was very exaggerated as well. That move should not have gone to $9. That should have been more or less a move to 520, 550, rather than a move to $9. So a very exaggerated move on the third peak of the tri-peak to the upside, and now a very exaggerated move for the third bottom to the downside. So back to the original chart here. Having now come down to this 250 level, we are at the midpoint here, and this is very strong resistance. This is the only price action in this range. Other than today, coming down to this 250 range, there's no other price action in this range here. So we're sitting right on top of 250 support right now. We do have a gap at 230 right below us, and then below that we have a gap at 157. Again, I would not be surprised in the slightest to see that fill. I don't want to see that fill. I don't really mind 230. I don't want to see 157 fill whatsoever. Sub 250, it's pretty much air underneath us. There's not much support down here. Sub 250, you're talking about you're coming back into the $1 range. So I wouldn't really mind a fill at 230. 157, things at that point are going to be, a little bit nervous, because you absolutely do not want to form a lower low than the previous macro here. Now, that being said, you could pretty much ignore everything I just said, and let's just look at the OBV of all this move here. So from IPO until the original squeeze on AMC, January squeeze here, June squeeze here, OBV completely flat. You get the pump in January, you get the pump in June, and then you're trading in this triangle here, and we actually broke out to the upside. Having come down from $72 all the way down to $2.50, OBV nearly touched all-time highs on the gap down. This green dotted line running across is all-time highs on OBV. traded in this pattern, forming higher highs and higher lows. You have an upside resistance, bounce, 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 and we actually broke out and retested on the gap down to 250 and all this price action here. So OBV is pretty much sitting at all-time highs right now, while the price of AMC is 100% away from all-time lows. So really quickly, I have a little snapshot right here. So I'm just going to read this. OBV rises when volume on up days outpaces volume on down days. So the volume on up days is higher than the volume on down days. OBV falls when the volume on down days is stronger. So this first two sentences here, pretty much what we're saying is that the volume through all of this selling, the buying is outweighing the selling here. Yes, the stock is manipulated. Yes, we're running on a loop. But the buy volume throughout all of this is higher than the sell volume. Now, moving on. A rising OBV reflects positive volume pressure that can lead to higher prices. Conversely, falling OBV reflects negative volume pressure that can foreshadow lower prices. OBV would often move before price. Expect prices to move higher if OBV is rising, while prices are either flat or moving down. OBV would often move before the price. Expect prices to move higher if OBV is rising, while the prices are either flat or moving down. So OBV is forming higher highs and higher lows, pretty much hitting at all-time highs here, while the price action is declining drastically. We are an 100% move away from all-time lows here. 100% away from all-time lows on AMC right now. And OBV is pretty much hitting all-time highs. So this looks fantastic. Looking at this just from a macro outlook here, rising OBV has been a very good sign for AMC stock. So through all this selling here, all this downtrend, very flat, and then obviously OBV rocketed when this became, a meme play. So you get the January squeeze, you rocket, flat line right there, and then rocket again in June, and then trade in this triangle, and actually broke out on the gap down that we're seeing here to 250. So this looks great. Moving on from that into the macro, and this is getting just hard to look at. It's still completely valid and tracking perfectly. It's just the lower low is very exaggerated. Maybe it's supposed to be that way. Maybe we're meant to fill the gaps to the downside. They were left for a reason, so maybe that is what we're gonna see. Tomorrow is the last day before the reverse split and conversion go through. So tomorrow's Wednesday. Thursday, 4 a.m. reverse split will be in effect, and then Friday the conversion of APE into AMC. So it's possible the macro is meant to fill these last two gaps to the downside. It's very possible you get a bloody day again tomorrow. And just moving on from that into the macro now. Same story, different day here. Downtrend from 2017 until you squeeze January 2021. The comparable would be the downtrend here from the breakdown, the flag from the June highs. All the same stuff here. Macro break here, gap down. Macro break here, gap down. W. Laddering down from there, 6 points, takes you to the end of the blue on both sides, and then dropping to the flat portion where you have 3 touches on the bottom, 1, 2, and 3. Third touch obviously is the lower low. That leads to an uptrend, which breaks you out of the triangle and a straight line to your squeeze. Same story over here, 1, 2, and 3. This lower low is very, very exaggerated, as was the third peak of the tri-peak. This was not supposed to come this high for the third peak of the tri-peak. It should have been somewhere in the $5 range. So a very exaggerated move to the upside on the third peak that you're seeing right here, and then a very exaggerated move to the downside for the third bottom, the lower low. Moving on to the flat portion of both sides now. So January up top and AMC on the bottom. Same story here as well. First bottom, you get the 5 peaks. First bottom, you get the 5 peaks. And then you get your second bottom. And then the third is the lower low here. Tri-peak in the middle. And then the 2 levels of resistance we're looking for to break are $4, $4.01 roughly. And then $5.20 plus would be your macro break right here. Again, more likely than not, it will be a gap up that takes us into this range here, and then it will be a gap up that breaks us above 520 here into our squeeze. Looking at AMC and APE combined now, and we're just looking at the macro here. So I zoomed out also including the downtrend that actually took you to the flat portion. So what I'm showing here is this whole thing, 5 to 6, this downtrend that you get that takes you to your flat portion, 1, 2, and 3 bottoms. So that right there, let me just zoom out if I could just get this like this. So the downtrend 5 to 6, 5 to 6, and then dropping to the flat portion is what I'm about to show you, except the chart is AMC and APE combined. So this is coming down from your 5th point, and then the 6th point would obviously be the arrow here before you drop to the flat portion. So you get this cut move here, as you see here, and then you get a downtrend, and then curl up towards the end before dropping to the flat portion. Your first bottom, the 5 peaks that break above the red horizontal line, the second bottom, which is higher than the first, as it was in the previous cycle, the 3 pokes above for the tri-peak, 1, 2, and 3. Again, the third peak was very exaggerated to the upside, and then the final break below the red horizontal line here, and a very exaggerated move for our third bottom here. Again, the third bottom is slightly lower than the first, pretty much a double bottom, and looking at AMC and APE combined, pretty much the same story here. It's 50 cents lower than what we saw here. So slightly lower than the first bottom is what we got right now. This looks great. Still no complaints. Moving on, zooming in, and I could just really quickly go over this again. January up top, and then AMC APE combined on the bottom, breaking below the red horizontal line here. You get the chop underneath, as you see here. You get the 5 peaks increasing in height on both sides. Again, this played out much faster in the current, and then you get the break below the red horizontal line again. You poke through it, break below, poke through it. Second bottom, the tri-peak, very dragged out from your second to third tri-peak here. Your second to third peak, and again, a very exaggerated move to the upside on the third peak compared to the landmarks that we were looking for, and then breaking below that red horizontal line again for your third bottom here, the lower low, which again is an exaggerated move to the downside, as we saw with the third peak of the tri-peak, and slightly lower than the first bottom, exactly how we saw up here. One final thing going over the Fibonacci spiral. Again, from all-time lows to all-time highs on AMC, and starting at IPO, very interesting touch points here. The first touch point is the start of the original flat portion, which took you to the January squeeze, and then you come down from there, and you get the June squeeze where you find a rejection, come down from there, and now we're sitting at the end of the spiral here, while at the same time also at the end of our macro. And the Fibonacci spiral, you know, my price targets that I've gone over multiple times, $140. Pre-split, not post-split, pre-split, $140. Obviously, we're not going to see that pre-split. The reverse split is the catalyst, so the squeeze would be after the split, and split adjusted would be roughly $1,400. I have to go over that when the time comes. But looking at the Fibonacci spiral, it's projecting a move to $300. So the rejection that you would find would be the top of the spiral here at $300. Theoretically, I'm not saying I'm changing my price target to $300. Once again, I'm not saying that. I'm just showing this. Very interesting touch points here. Very interesting touch points from all-time lows to all-time highs starting at IPO. Again, first intersection is the original flat portion, which took you to the January squeeze, reject June, and then come down, and we're at the end of our macro, as I've shown multiple times, and it's right at the edge of the fib spiral here. So again, it's projecting a $300 price target. And somebody asked me if I could zoom in. So here it is zoomed in. So here would be the resistance of the outside wall of the Fibonacci spiral here, and this would have been the third peak of the tri-peak, and then coming down, you actually rejected right off. This was that Friday's close, closed right under the resistance of the spiral here, rejected, gap down, climbed back up, actually poked through, and then rejected again, and this is where we are now. So this was just zooming in on this segment right here. Again, at the end of the macro and at the end of the spiral here, zooming in, here it is. The Friday rejection, the gap down to the third bottom, a climb back up, and then a rejection down again. And really quickly before I end the video, OBV looks great. I covered all of this already. Just from a macro standpoint, once again, we absolutely do not want to see a lower low. I 100% don't think we will. I'm just pointing this out. Just fractally speaking, Looking at something like Bed Bath Beyond, I know this might like hurt some people's feelings saying this, but Bed Bath Beyond is a macro in a downtrend. The current macro of Bed Bath Beyond formed lower highs and lower lows. That's a macro in a downtrend that's bearish. From just strictly a fractal standpoint, obviously lower lows, lower highs is bearish, but just strictly speaking fractally here, when you're looking at a macro like Bed Bath Beyond, that doesn't look good. So we absolutely do not want to see a lower low here. We don't want to break the all-time lows on AMC. 100% don't think we will. And once again, the two gaps to the downside we have left are 230 and 157. And again, I don't mind filling the gap at 230. We're pretty much sitting right there anyway. But 157, this is where things are going to start getting shaky. And once again, there is pretty much air under us as far as sub 250. There's not much support down here. The support you're looking at is pretty much all-time lows. So that's pretty much it for the video. I would probably expect another wild day tomorrow, and I absolutely would not be shocked if we saw another iteration of bear flag. Let me just go to the chart really quick and go to the 15-minute. So here would have been the knife from Friday, and then the climb back up, and then the knife now. Heading into the reverse split and conversion, coming down to our third bottom, the lower low. Although it's exaggerated, fractally speaking, the landmark makes perfect sense. I wasn't expecting to come this low personally. I don't think anyone was. Actually, a few people were. But coming lower than this, it's possible. It's possible we're getting another leg of the bear flag here. So it is possible that we come down even lower tomorrow, and this would obviously be the last day of downside we see, heading into the reverse split conversion Thursday, Friday. Just a final shakeout, just triggering all stops that the algo can trigger, getting anybody out of the play that has stops set at this level here. And that's pretty much it. So I will catch you guys with an update tomorrow, and that's it.